In part 2 of this lecture, we continue our exploration of income tax withholding on non-business income. The manner of withholding changes with certain types of payees and certain types of income. However, a withholding agent may not always have the documentation necessary to know the type of payee or the type of income, so therefore may not have enough information to know how to withhold tax. In the absence of complete documentation, a withholding agent must make certain presumptions regarding payees and income. The regulations provide detailed guidance regarding these presumptions. Emphasis is placed on the word must. The withholding agent does not have an option to ignore presumptions regarding the amount of required withholding. Key presumptions relate to the following: the type of payee, including whether the payee is an individual, corporation, partnership, trust, or estate; the status of the payee as domestic or foreign; the foreign status of a service provider; and presumptions regarding specific types of income. The first presumption regards the payee status as an individual, corporation, partnership, trust, or estate, or other entity. Presumptions as to the type of payee are made sequentially as follows. A withholding agent must presume that a payee is an individual, a trust, or an estate if the payee appears to be such person based on the payee's name or other indications. Otherwise, the payee must be treated as a regular corporation if its name contains an unambiguous expression of corporate status, for example, Inc., PC, or a foreign equivalent. Or the payee is treated as one of the other types of entities listed at Regulation 1.6049-4C12B through Q. These include, for example, exempt organizations or retirement plans. They're treated as one of these organizations if there's some indication of the organization's status as such. If none of the above presumptions can be made, then the payee is treated as a partnership. Let us turn now to presumptions regarding status as a U.S. or foreign person. As a general rule, the regulations provide that a payment that a withholding agent cannot reliably associate with documentation is presumed to be made to a U.S. person, except as otherwise provided in the regulations. The next set of slides are exceptions to this general rule. Here are presumptions regarding foreign status. A payee is presumed to be foreign where the payment is made to an offshore account. If the payee is presumed to be a corporation, the entity is presumed to be foreign if the entity's ID number starts with 98, communication with the payee is mailed to a foreign address, the payee's name indicates a foreign entity, or the payment is made to an address outside the United States. Here's an example of presumptions as to the type of payee and foreign status. Domestic Co. makes a payment of U.S. source dividends to Entity X, Inc. at an address in Bermuda. Entity X does not provide Domestic Co. with documentation upon which it can make a reliable determination of the type of payee that Entity X represents or its status as either foreign or domestic. Based on the Inc. in its name, Domestic Co. may presume that Entity X is a corporation, and based on the address to which the payment is made, Domestic Co. must presume that Entity X is foreign. Accordingly, Domestic Co. must withhold tax at 30%. Another presumption regards the foreign status of an individual performing services. Payments for services are deemed to be paid to a foreign person if the payee is an individual, the withholding agent does not know or have reason to know that the payee is a U.S. citizen or resident. The withholding agent does not know or have reason to know that the income is effectively connected with a U.S. trade or business. All of the services were performed outside the United States. If the payment for services would be taxable in the United States, the payment is presumed to be made to a foreign person, and there is no documentation to show that the income is effectively connected, then tax must be withheld. Failure to withhold can subject the withholding agent to liability for the tax. Presumptions can be made about specific types of income, but may not be made about others. A withholding agent cannot exempt certain types of payments from withholding and may not reduce withholding on such payments without proper documentation concerning the status of the recipient of the payment and that recipient's qualification for exemption or reduced rate. The most important exemptions for which full documentation is required are as follows. The portfolio interest exemption. Under the regulations, a recipient must provide the payer with the required documentation of foreign status in order to qualify for the portfolio interest exemption. A reduced rate of withholding under a tax treaty. The exemption for effectively connected income. And the exemption related to compensation for services performed in the United States. A withholding agent can, however, exempt other types of payments from withholding under Sections 1441 and 1442 without full documentation, but may have to withhold tax under the backup withholding provisions of Section 6049. The most common payments of this type are as follows. The exemption for interest on bank deposits. The exemption for OID interest on short-term obligations. The exemption for foreign source income. And dividends paid by a foreign corporation that were subject to branch profits tax. Branch profits tax is going to be discussed in a separate lecture. Here's an example of presumptions regarding types of income. Domestico makes an interest payment of $10,000 on a registered bond to Foreign Corp. The payment is made to a foreign address. On the date of the payment, Foreign Corp has not furnished Domestico with documentation that associates the payment with Foreign Corp. Domestico should assume that Foreign Corp is a foreign person because of the foreign address. If Domestico does not withhold tax on the interest payment, then it is liable for the tax if Foreign Corp does not file a return and pay the tax. This is because documentation of foreign status is a condition of the portfolio exemption. What happens if a withholding agent does not have adequate documentation of status but has actual knowledge of status, which could reduce or eliminate withholding? The regulations provide guidance on what a withholding agent can and cannot do with actual knowledge of a payee's status in the absence of proper documentation. The key thing to know is that if the withholding agent does not act on the presumptions discussed in the regulations and instead acts on its own knowledge, then it may be liable for unpaid tax, interest, and penalties if its actual knowledge turns out to be wrong. It can even be liable if it acts based on accurate information, as explained in the regulations. Here's an example of withholding based on actual knowledge. Domestico, a U.S. corporation, makes a dividend payment to Foreign Corp at an address outside the United States. Based on the presumptions discussed previously, Domestico must treat Foreign Corp as a foreign person. However, Domestico has actual knowledge that Foreign Corp is an exempt recipient. However, Domestico should not rely on its knowledge to not withhold tax. If the knowledge is not correct, then Domestico is liable for tax, interest, and penalties. If the knowledge is correct, Domestico may still be liable for tax, interest, and penalties, although Domestico can reduce its liability by demonstrating that its actual knowledge was correct and that the tax was not due. Let us now talk about tax forms and other statements used to certify status as either a resident or non-resident, claim exemption from withholding, or claim lower rates of withholding. Following are common forms used for this purpose. Form W-9. A payer can treat the payee as a U.S. person if the payee provides a Form W-9. The Form W-9 can be used only by a U.S. person and must contain the payee's taxpayer identification number. If there is more than one owner, the payee may treat the total amount as paid to a U.S. person if any one of the owners provides a Form W-9. Note that U.S. persons are not subject to non-resident alien withholding, but may be subject to Form 1099 reporting and backup withholding. Form 8233. This is the exemption from withholding on compensation for independent and certain dependent personal services of a non-resident alien individual. A foreign person generally provides Form 8233 to certify status regarding compensation for personal services. This form is used by a foreign person to claim an exemption from withholding for compensation from independent and certain dependent personal services. Form W-8-BEN, Certificate of Foreign Status of Beneficial Owner for U.S. Tax Withholding. This form is used by a foreign person to establish foreign status, for example, to demonstrate qualification for the portfolio exemption, to claim that such person is the beneficial owner of income for which the form is being furnished, or a partner in a partnership subject to Section 1446 withholding, and if applicable, to claim a reduced rate of or exemption from withholding under an income tax treaty. Form W-8 ECI, Certificate of Foreign Persons claim that income is effectively connected with the conduct of a trade or business in the United States. This form is used by a foreign to establish foreign status, claim that such person is the beneficial owner of the income for which the form is being furnished, and claim that the income is effectively connected with the conduct of a trade or business in the United States. And finally, Form W-8IMY, Certificate of Foreign Intermediary. This form is used to provide a payer with the payee's information regarding its status as either a qualified or non-qualified intermediary. In general, a withholding agent can rely on information provided in certification forms unless it has information to the contrary. A withholding agent can generally rely on information in a withholding certificate or its equivalent furnished by the beneficial owner or payee of the income. If the information later turns out to be incorrect, the withholding agent is not liable for underwithholding. However, the withholding agent cannot rely on the certification if it has actual knowledge or reason to know that the information is incorrect, and based on that knowledge, it should withhold a greater amount of tax. Here's an example of reliance on a certificate. In 2001, Domestico pays dividend to Arnold, a country X resident. Arnold supplies Domestico with a false Form W-8-BEN, indicating that Arnold is a resident of country Y, and that he's entitled to the benefits of the U.S. country Y treaty, under which dividends are taxed at 15%. Domestico can rely on the Form W-8-BEN and cannot be held liable if it later turns out that Arnold was not entitled to the treaty benefits. However, if Domestico knows, or should know, that Arnold is not a resident of country Y, it cannot rely on the Form W-8-BEN and must withhold tax at 30%. Certain forms are used to report income and related withholding to the United States government. Form 1042 is used to report non-business income subject to withholding. Related Form 1042-S is used to report the income and amount withheld from individual payees. Form 8288-A is used to report withholding on a disposition of a U.S. real property interest. Such withholding is discussed in a later lecture. Form 8805 is used to report withholding on distributions of effectively connected income to partners. In our lecture on the taxation of non-business income, we discussed the types of interest income taxable in the United States. All of that income, if taxable in the United States, is subject to withholding. However, certain special rules apply in determining the amount of withholding. Following are two of these special rules. The gross amount of interest payments is subject to withholding even if a portion of the payment is a return of capital, such as where bonds were purchased at a premium. Original issue discount is subject to withholding, but not as it accrues. Withholding is done when payment is made. Next, we look at dividend income subject to withholding. The entire amount of a corporate distribution is subject to withholding, even though the distribution may exceed earnings and profits. However, the payer can elect not to withhold on the excess of a distribution over the estimated earnings and profits, a distribution to redeem stock, that portion of a distribution from a mutual fund representing capital gain or exempt income, the non-taxable distribution of stock or stock rights, and a distribution subject to withholding under Section 1445 with respect to a U.S. real property interest. Note, however, that the withholding agent remains liable for underwithheld tax if the amount of tax it estimates on a distribution turns out to be wrong. In our lecture on the taxation of non-business income, we discussed the types of personal services income taxable in the United States. Special rules apply in determining the amount of withholding. A significant item of gross receipts can include reimbursement for expenses, so let us consider the withholding rules for these. As discussed in the lecture on the taxation of non-business income, one requirement for taxation of a non-resident alien or foreign corporation is an item of income must be taxable as gross income under U.S. tax law. If the income is not taxable, then withholding is not required. Reimbursements for travel expenses and other expenses made under an accountable plan are not taxable under U.S. tax law, whether received by a U.S. taxpayer or a non-U.S. taxpayer. Accordingly, these receipts are not non-business income and are not subject to withholding. However, reimbursements not made under an accountable plan are ordinarily included in taxable gross income, so would be subject to withholding. However, as noted earlier, such amount may be included in compensation covered by treaty or effectively connected compensation, in which case the payments would not be subject to withholding as long as the recipient provides the payer with the proper documentation. Let us now turn to special rules for withholding on U.S. real property rental income. Rents on U.S. real property are generally subject to 30% withholding on the gross rent amount. However, the foreign person can make an election to treat rental income as effectively connected income, in which case no withholding is required. In order to take advantage of the election to treat rental income as effectively connected, the foreign person must provide the payer with a Form W-8 ECI. Here's an example of withholding on rents. Marquez is the owner of real property in the United States and receives rents from various tenants in that property. Marquez makes an election to treat the property as a U.S. trade or business, and all of the income is effectively connected. He provides each of his tenants with Form W-8 ECI, indicating that the income is effectively connected. Accordingly, the tenants do not have to withhold on the rental payments. If he did not provide his tenants with the form, then they would have to withhold if they were required to presume that he was a foreign person. There are other special rules for withholding, which we will not discuss here. Special rules apply with respect to withholding on payments of non-business income made to partnerships. A partnership generally withholds tax on payments of effectively connected income to foreign partners. For a discussion of withholding as it relates to foreign trusts, see IRS Publication 515. For a discussion of withholding with respect to pensions and annuities paid by U.S. persons, see IRS Publication 515. For discussion of withholding with respect to alimony paid by U.S. persons, see IRS Publication 515. And for discussion of withholding with respect to scholarships and fellowships by U.S. persons, see IRS Publication 515. Let us now conclude our discussion by looking at rates at which tax is withheld. We will not be covering most of these rates, but it is good to know they exist. The taxable part of U.S. scholarship or fellowships paid to a holder under a F, J, M, or Q visa, 14%. Gross investment income from interest, dividends, rents, and royalties paid to a foreign private foundation, 4%. Pensions, part paid for personal services. Graduated rates in Circular A or Circular E. Wages paid to a non-resident alien employee. Graduated rates in Circular A or Circular E. Each partner's share of effectively connected income of a partnership, 35%. Distributions of effectively connected income to foreign partners paid by publicly traded partnerships, 35%. Dispositions of U.S. real property interests, 10%, or 35% in the case of certain distributions by corporations, partnerships, trusts, or estates. Dividends paid to Puerto Rican corporations, 10%. All other income subject to withholding, 30%. 30% withholding is also required whenever the payee is unable to provide documentation to show that the person is entitled to a lesser rate of withholding.